Did you say one time that if you do live to be old, that it actually will run out and they won't pay you? Is that on a whole life or a term life?
Yeah.
And are there any whole life that would be worth getting if I've already got some other stock investments?
So I was talking about whole life, universal life, anything but term. Term is term. So for 20 years, 10 years, 30 years, whatever the term is, the death benefit's going to get paid out. It doesn't accumulate anything. You pay for it every month. That's why it's so much cheaper than the others. The other kind of insurance, the whole life or the universal or all those other things that you are looking at, obviously you're paying a lot more into it with the notion that it's going to grow. The idea of the growth is not to grow your money, but the idea of the growth is, at least that what they sell, is that it's going to produce enough dividends and income to pay for the life insurance. And they even will say that at some point in time, it's going to be paid up. That can be true in some policies. It's going to be paid up until the mortality chart that they use says that you're going to die. So it is paid up until that point. And if you start very young, there's chances are that it's always going to be paid up because there's a large amount of money inside of it that is producing dividends. The problem is that as you get older, as we get older, our mortality charge, that the fees that are coming out get higher and higher, dramatically higher and higher. So now the same amount of money is trying to produce dividends to pay all the fees that are higher and higher. And I tell people in general that when you see your cash value go down, it's time to get rid of the policy. Because what will happen is if it went down, it's going to continue to go down as you get older. And eventually you won't have any cash value and they're going to send you a bill. If you want your life insurance, you got to pay a premium of $18,000 this year. I mean, that's what happens. And it's very intentional, in my opinion. The insurance company wins big time because you've been paying into it. They got to use all the money that it's earned and they never have to pay out the death benefit. It's a beautiful thing for insurance companies. So, I love life insurance. I think life insurance is a great, great thing, just like car insurance is. It is shifting the risk that you have for pennies on the dollar, and that's always a good thing. So I like that. Here's the problem, though. So many people have life insurance and they don't have any risk. It's like having car insurance, but you don't own a car or a driver's license. So and what I mean by that is who in your household is going to suffer financial risk? I'm not saying there isn't anybody in your case. I'm just saying in general. So you look and say, okay, yeah, I have this financial risk. My wife is going to suffer financially upon my death because she has to put kids through college or she has to hire daycare so she can go back to work. She has to pay the mortgage off. Whatever it is, there's a financial risk. And we should insure that. But there's usually a point in one's life where that risk is gone. And when that risk, when your mortgage is paid off, when you're out of debt, when, you're in certain situations where your income stream coming in is going to continue and your spouse or child or whoever's living with you is not going to suffer financial hardship, then it becomes a waste of money. You'd be better off investing in something.
Hey, remember to click the subscribe button right here on the screen. And don't forget to hit the notification bell so you'll be notified when new content is added. And more importantly than anything, you don't want to miss all 3 live hours of Financial Issues every day from 9 to noon. And you can watch it on FISM.TV. That's FISM.TV.